Welcome to Should You Buy It, the email edition. I'm Aaron Task here with David Peltier. He writes the Should You Buy It column, as well as the Dividend Stock Advisor and Value Investor newsletters. David, great to see you as always.
Thanks for having me back.
So let's get right to the emails. The first one comes from Claudia in Kalamazoo, who I think has emailed us before. She says, I have $3,000 to invest in two companies in which I already have a position. One is Melco, the other is Tata Motors. Both have dropped in the recent past, and that's a bit of an understatement in the case of Melco. Which would be a better investment? And is China riskier than India? What are your thoughts on these two? And I know you've liked Tata Motors in the past.
I have liked Tata Motors, and I still like it. I mean, if I have to pick between these two, I definitely think it's the better investment. I think that the Indian market is probably going to offer more consistent growth over the next decade or so, but that both India and China, there's plenty of growth.
Right, and Melco's a gambling play on Macau, and it's been hit because the Chinese have started to restrict some of the visas there. I should note that Nick Ulico, who writes about the casino industry for us, has been and is bullish on Melco. So he's got some coverage at thestreet.com if you want to check that out. Let's move on. Dave in Durham has an interesting question about Apple. He says it's technically going to become a phone company on June 29th. I imagine that wireless and telecom funds will be forced to pick up new positions. Is this enough to move the shares, or is it already built into the stock?
It's an interesting point. But I think if you read into most mutual fund charters, they're so loose anyways.
Right, they're not so strict.
They probably already own Apple if they really want to own it.
Right, and I would note Bob Faulkner writes the Telecom Connection newsletter, has a long position in Apple for a long time, and it's not so strict as you say.
Let's put it this way, whether or not you think Apple's going higher or not from here, I don't think there's any institution out there that doesn't already own it.
Right, great point. All right, let's move on to Ryan has a question about Premier Exhibitions, the symbol's PRXI. It's a stock he picked up in a high growth stock screen. I've been watching it for a while. This might be a good one to tackle next Wednesday, and here we are, and should you buy it, and we're tackling it. What are your thoughts on Premier Exhibitions?
Interesting company. It's a one-trick pony. It's actually a two-trick pony.
They got the Titanic and they got the bodies.
They got the bodies exhibit just up the street.
Right.
It's different. It's interesting, but it's very popular. They're making a lot of money on it. And if you believe the company in that they can continue to move this across the country, they now have 11 exhibits of the bodies, and they think they can make 68 cents a share next year. When you look at it that way, even though the stock's already up, it's almost up 3 times this year. They're only trading at 24 times next year's earnings.
Right, so that's a pretty good PE to growth ratio. Yeah.
It is, I think, but if you're going to invest in this long term, you would have to, there would have to be more information from management. What are they going to do next?
Right.
The Titanic thing's only going to last for so long. The bodies thing may last a little bit longer, but it's only going to last for so long.
Right.
What are they going to do next?
All right, well, David, thanks very much.
Thank you.
Every week at this time, David and I will take your emails. Our emails are on the screen, so please send in your questions and comments for the next edition of Should You Buy It? I'm Aaron Task. Stay tuned for more of thestreet.com TV.